Hey everybody, this is Jack Alwell with another money episode, and today we are discussing a little bit of real estate trends. And a guy that I follow quite heavily, George Gammon, pointed me to a site called longtermtrends.net. And I was snooping around about this. I mean, on his episode, he was talking about the government debt per GDP and the real GDP growth, and how you could see when, as government spending kept going up and up and up, the real GDP growth was going lower and lower at each time interval. So that was an interesting thing. Now this site is really cool, and I suggest you look it up. I will link to it in the comments. There is this real estate to gold ratio that caught my eye a little bit, because I do like real estate. And about a year and a half ago, when I was thinking about getting more control over my money, I thought, should I keep the money in the market? Should I? And this was some of my old 401k money, and I still have another 401k. I don't suggest you just surrender your 401k, but that is what I decided to do to get a 7-unit rental property up Michigan. And then we also bought a short-term rental in South Carolina. And I was basically comparing what I thought those multiples were in real estate versus the multiples in the stock market. And the stock market seemed quite expensive. And that was one of the reasons I decided to surrender my 401k, pay the 10% penalty in the taxes, and get it in the 7-unit to produce cash flow right now and get that loan paid down. And I thought I would do better now. And I think a lot of people would say houses have been getting more and more expensive, and now the interest rates are going up. We're seeing a slight retrace back down, but most people would say it's still quite expensive. So I started looking at this gold, or the real estate to gold ratio. And if you go to the 10-year time frame, we have been slowly going up. And I think this is an interesting ratio to look at, because you're not measuring it in US dollars, which are being devalued by money printing. So it's kind of harder to tell if it's really getting more expensive or not. And one thing I do when I track my net worth is I actually do my net worth in dollars, and then also in terms of ounces of gold, because I feel like ounces of gold, like gold is a little bit more stable than the dollar in terms of its supply. I mean, yes, you can make more gold, but they're making a real lot more dollars. So I think looking at my net worth in terms of gold is, it gives you another perspective and a little bit more stable of a base or denominator when you're doing some of these. So this was kind of interesting when I saw it, because over the last 10 years, the home price index to gold has been going up. Obviously not as like a straight line, but historically, it actually looks quite low. So now I'm thinking, man, is real estate really actually cheap? Like, maybe I should be looking harder at doing even more deals right now. So this is definitely an interesting graph. I suggest you look at this longtermtrends.net. And one other thing I wanted to point out, the Shiller Case Home Price Index. I had heard of it, but I didn't really know what it was. And if you click, and this is through spglobal.com, the S&P CoreLogic Case-Shiller U.S. National Home Price NSA Index is a composite of single-family home price indices for the 9 U.S. Census divisions, and is calculated monthly. That's interesting. So it seeks to measure changes in the total value of all existing single-family housing stock. Reason to think that all of single-family housing units are getting cheaper compared to gold. Now, is that because Yeah, I guess I might not be understanding this index, like, because if there are just less people buying homes in general, does that, I guess the mechanics of this index, I'm not entirely comfortable with, but if you're just telling me that seems like the value of a single family home or all the homes aggregated together to gold is actually low, I would reason to say that, oh, maybe now is actually a time to invest. Now, one thing we probably should look at is how's the gold spot price moving? And I don't know if we can go all the way back to 1890, but this goes to 1970. So, I mean, pretty drastic change. I think some people would say with all the money printing, they would actually expect gold to be higher, which would then, you would think this ratio would be even lower. So, which makes it look like a good time to, or looks like a good value for real estate right now, all things considered. I know it's crazy in dollar terms, but in gold terms, and I don't know, maybe it doesn't make sense to even look at this gold component anymore. Maybe people, yeah, it's just, I don't know. What do people think? Let me know in the comments, and I will talk to you in the next episode. Bye.